Hi, I'm Roger Dooley. Before we get going, I'd like you to do one small favor for me. Please take your finger and touch the back of your hand. And then just remember that. We'll get back to that in a few minutes. Now, I think today banks are pretty banged up. Let me give you just a few data points on that. A big study of customer satisfaction showed that every bank listed was below average compared to all other companies. A Bain study showed that people around the world to varying degrees trusted tech firms more than banks, much more in some cases. And 4C is a company that I usually mock because they ruin your customer experience even as they try and measure it with their crazy pop-ups. But they did find some interesting information about banking. One is that the Net Promoter Score for big banks was way below the average for all companies. And even more troubling was that 21% of bank customers would change brands today if they could, if it was easy. Coming at it from another standpoint, the Axios Harris rankings for corporate reputation didn't put banks in a great light either. There were only 4 banks that made the list, and they were in the bottom half. 2 of the banks were at the very bottom of the listings. To put this in perspective, Bank of America ranked multiple places below United Airlines, who lately has been known for beating up their passengers and suffocating their pets in overhead bins. Even worse is Wells Fargo, who ranked better than only 4 brands: Sears, who seems to be in a death spiral, the Trump Organization, Philip Morris, who sells a product that, well, kills their customers, and the US government. In fact, Wells Fargo is named one of the 10 most hated companies. Looking at it from yet a different perspective, KPMG did a study of customer experience in the UK, and they ranked 100 firms that offered really great customer experience. Of the big 4 banks in the UK, only 2 made the list, and they were well down it. And if we look at how banks are marketing themselves today, what I'm seeing a lot of is offers like these, where basically banks are offering me a big pile of cash to open an account. Is this really the best, most creative kind of marketing that we can do? You might get the impression from that banks are in trouble, and you wouldn't be wrong. But I do think that this same woes that I'm describing here represent an opportunity, both for smaller brands to grow and also for the big brands to improve their customer experience. Looking at those same KPMG listings, the top 2 spots were actually held by financial firms, not big banks, but one of them in the number 2 slot was Monzo. They are only 5 years old, and yet at the time that KPMG put this together, they were signing up 35,000 new accounts every week. Just a week or so ago, Lemonade, in the insurance space, closely allied to the banking space, had a blowout IPO because their customer experience is so much better than their traditional, not very well liked, bigger competitors. And if we look at consumer lending in the US, who is the top dog? It is not one of the big banks, as you might expect. It is Rocket Mortgage. Not only are they the biggest, they have the highest customer satisfaction ratings of any bank. And that's probably not a coincidence. Now, you might be wondering, okay, well, what can we do about this? Looks like a serious situation, and I'm going to offer you a key. It's one key of several perhaps, but I think it's an important one. For years, banks have focused on acquiring new customers, and new customers are great, to be sure, but loyal customers are better. Loyal customers are more profitable customers. And what drives loyalty? It might surprise you that low friction drives loyalty, an easy customer experience. Gartner, the big market research company, did a study of customer service interactions. They found that 96% of customers who had a high-effort interaction said they would be disloyal to the brand. That's about 10 times as high as those who had a low-effort interaction. Similarly, 94% of low-effort customers said they would buy again, compared to just 4% of high-effort customers. And today, we know how important word of mouth is. We've got reviews, we've got ratings, we've got social media. And what Gartner found was astounding. For the high-effort customers, 88% said they would be likely to say bad things about the brand, compared to just 1% of low-effort customers. Just to recap those numbers, for those customers who had a high-effort experience, 94% said they would be disloyal. 4% said they would buy again, and 88% said they would say bad things about the brand. And here's the kicker, that high effort is in their head. It is not an objective measure of the customer effort you're providing or the customer experience. It's not how you compare to your direct competitors. The bar is being set by brands like Uber and Amazon. And if your experience is not as smooth and effortless as theirs, then it will be high effort. Let's do a little bit deeper dive into friction in the banking space. My virtual friend Peter Ramsey is a user experience expert in the UK, and he did something that no human should be forced to do. He opened accounts at 12 different banks more or less simultaneously to document what the experience was like. And he found some pretty amazing differences. The number of clicks to set up an account varied from a low of 24 to a high of 120. That's a 5-time difference. Now, clicks are not the only measure of customer experience or effort, but certainly there's different things going on in the processes of these brands. And when you try and address these issues, when you say, okay, we can get rid of some clicks and some keystrokes, you will get pushback on that from the people who are developing the apps and the websites. They'll say, it's not really a lot of effort. People expect to do this. It's no big deal. It's compliance. It's this, it's that. You need to push back because let me tell you a story. In 1998, Jeff Bezos and Amazon patented one-click ordering. A lot of companies didn't think you could patent that. It seemed too simple, too obvious, but they did. And pretty soon they were locked in a big legal battle with Barnes & Noble, their chief competitor. They ultimately, after spending millions of dollars, prevailed. And what did they get for that money and effort? Remember our one little tap? This is what they imposed on the customer experience of their competitors. Barnes & Noble and other e-commerce companies had to add one tiny little click. And Jeff Bezos at Amazon thought this was worth millions of dollars to defend. Now, there was one other smart person at the time who saw one-click ordering. That was Steve Jobs, who was about to launch Apple's new music store. He thought that that one click was worth quite a bit, so Apple did not fight it. They didn't try and develop a workaround. Instead, they paid Amazon $1 million so they too could save one tiny little click over their competition. Now, today, your new customers tend to be very mobile friendly or mobile first, and there's friction in that space too. When Ramsey tried to open an account with the apps of various brands, he found about 2/3 of the cases you cannot do that from within the app. You would have to go to the website, go to a branch, or do something else. You couldn't do it that way. On the other hand, 4 of the brands did let you do that, including Monzo, the firm we already described as adding tens of thousands of new customers every week. For these brands, it was worth the little bit of extra expense and effort to incorporate that functionality into the app where at least some of their customers might expect to find that. If we look at why Rocket Mortgage is so successful, it's because of their easy process. It's simple. They auto-import as much data as they can. They auto-fill the forms as much as they can. They were mobile friendly way before their competitors, and their motto is push button, get mortgage. They are emphasizing how frictionless their process is compared to other firms. Another kind of friction is waiting. If you've ever sat around waiting for the cable repair person in that 8-hour window, you know what I'm talking about. And it's not just the time involved, it's the uncertainty, the stress of not knowing when it's going to happen. That happens with banks too. When Ramsey recorded how long it took before the accounts were fully operational, where he could use all aspects of the account, the best performers delivered that in 2 days. A few took just a little bit longer. Some took a lot longer. In fact, one brand took 36 working days, probably about a month and a half of real time before he was fully able to use the account. That's crazy. Another kind of friction is customer confusion. When your customers are interacting with you and they're not sure what to do next, this creates uncertainty. It slows down their process. It's stressful. It creates cognitive load for them. And some may just stop doing whatever it is they're doing. So by all means, don't force your customers to be hieroglyphics experts when they decode those little icons on your mobile app or on your website. Instead, you need to make it easy, intuitive, and frictionless. And this is all based on the law of least effort. Daniel Kahneman, a Nobel Prize winner in economics, says that there is a law of least effort that applies to both cognitive and physical exertion, and that laziness is built right into our human nature. His colleague Richard Thaler puts it a little bit more simply. He says, if you want to encourage some activity, make it easy. And this is pretty much the concept that won Thaler the Nobel Prize, but it amazes me how few businesses really internalize this, that they really get this concept. Now, let's go a little bit farther down the rabbit hole of looking for friction and look at employee experience, because employee experience is one major determinant of customer experience. The management guru, Tom Peters, was on my podcast just a few weeks ago, and probably for the millionth time for him, he emphasized that your customers can never be happier than your employees. If your employees aren't happy, they are not going to deliver the sort of customer experience that you want them to. So focus on your employee experience too and getting the friction out of it. Look for bad processes, dumb rules, and all of these things often indicate a lack of trust. You put processes and rules and approvals and such in place because you don't trust people to do the job right or to do it honestly. In fact, trust is critical. Oxytocin researcher Paul Zak looked at high-performing companies, and he and his team went in and did thousands and thousands of employee surveys and took thousands and thousands of blood samples. And what they found was pretty startling. They found that high-performing companies were companies where there was high trust, as indicated not just by the survey data, but also by the oxytocin levels in the blood of the employees. So as you're looking at your employee experience, focus on effort, because your people know when they are wasting their time, when what they're doing is not serving the customer or the company or themselves. And again, just as with customers, that perception is in their head. It's the perception of effort that counts. Now, what I want to do is close with one short story. This goes back 30 plus years. I had a little specialty lock that was frozen. The key was stuck, wouldn't turn. So I went to a locksmith. He looked at it, reached under his counter, got a can of some stuff, gave it a quick squirt, and lo and behold, the lock worked immediately. The key turned, came out. It was fine. He would not take payment for fixing my lock, but he did sell me a can of the stuff that I had never seen or even heard of before. Now, here's the strange coincidence. Just a week later, I was at a Formula One race at a track just outside Toronto. And what did I see in the pit garage next to one of these exotic vehicles? I saw a can of the exact same stuff that the locksmith had sold me. I found that pretty strange. Now, you may be wondering what that was, but I'm guessing that a lot of you have figured out that it was WD-40, because we know we can fix anything with just two things. If something moves and it's not supposed to, we duct tape it. If it's supposed to move and it doesn't, we WD-40 it. Now, mechanical problems tend to be pretty straightforward to solve. Business problems, not so much. Wouldn't it be great if there was a can of magic spray like that locksmith sold me that would give us more loyal customers and more engaged team members? Well, I hate to tell you, there is no magic spray, but there is one strategy, a friction-based strategy that addresses those issues and many others. So let me just circle back to Richard Thaler for a second. If you want to encourage some activity, whether it's by your customers, your employees, or even yourself, make it easy. Now, I wish we could meet in the hallway or perhaps have a drink in the lobby bar, but we can't do that because this is a virtual conference. But I encourage you, if you want to continue the conversation, you can find me easily on social media and my websites. And I hope that sometime soon we can meet in person at a real live conference. Thanks for tuning in.